again. This is our AMA, and today we're joined by Maxim Ermilov, founder of Overnight Finance. And as you guys know, we're doing those AMAs every week, and we're here to answer your questions, and also we're here to share the developments, what we've done during the last week, and make sure that we have enough time to answer your questions. Hey Max, how's it going? Doing good as well. All right, let's kick it off. The last week was pretty heavy on development, so let's jump right into. The first thing is hedge strategies. So, as you guys know, times have been uncertain in the crypto markets lately, and we've consistently reevaluating our risk of tolerance. So trying to hedge ourselves against uncertainty and protect our holders against potential volatility, we've begun exploring borrowing USDT against our lent out USDC on Aave. So what it actually gives us? So this allows us to hedge ourselves versus USDT price volatility.
Like personally, I think that the USDT collateral is like fairly questionable. So there's certain stables that are verifiably collateralized. But let's say USDT, for example, would you then give it like a kind of do like a risk analysis, have the DAO and have the governance vote on what the ratios would be for the collateralization?
Yeah, as I said, one Sovereign token is there. That's what people will vote for. In the meantime, the only stable coin which meets, as I said, we would only invest into stable coins, which can be borrowable on Aave.
So yeah, but even some stable coins still are, the collateral is questionable, even if it's if, for example, you're borrowing, even if you're using a stable coin, like DAI is, I trust DAI because they're over collateralized.
Yeah.
But is your criteria to be like no algo stables, and then just what about algos that are collateralized, but the collateral is just questionable assets?
You mean like Frax?
Yeah, there's a few others out there as well, but yes, because sometimes the tokens that are collateralized are just shitcoins. So like, yeah, the peg might look good, but one day you could just have a rug on a major collateral.
So we basically so we want to increase the share of DAI exposure. That is full stop. I mean, that is very certain for us, in particular since the last week. USDT will have exposure to USDT. It's extremely widespread stablecoin. There's huge amount of trading happening with it. It is proving it has huge bad reputation, but every time there is an issue, it's proving that it can hold its peg. It's proving that it's kind of can, redeem the money, kind of, and they always have the cash when they ask to leave the cash. So what we see is that it has disproportionately bad reputation, which kind of exceeds how bad it is. But we want to reduce exposure to USDT because this reputation kind of can result in very high yields and too prohibitive costs for us to hedge USDT.
Okay, and you're pulling the Chainlink Oracle prices for those tokens?
Yeah, of course. I mean, we mark to market our position only based on the Chainlink oracles.
I had seen that you guys are running like arbitrage, basically like to stabilize your peg. Do you do it internally, or do you use like an external market maker?
We do it ourselves, but the way we do it is that we mint redeem USD plus with flash loans of USDC. And we can arbitrage against UniV3. So, for example, for our VMatic pool, where we have VMatic USD Plus, whenever we see difference in price between VMatic USDC on UniV3 and VMatic USD Plus on Dystopia, we'll just arbitrage.
Okay,
and we do it ourselves because, we have all this. And you asked me about bad stable coins, like which don't have proper collateral. I mean, we we do very serious due diligence.
Yeah, that's
and
why I asked more about
I mean,
I asked about the DAO, because even now, like for me as an investor, like I wouldn't feel comfortable until I know that the people are choosing the collateral, mainly because there's always the possibility that some tokens, unfortunately in DeFi, I think the higher risk tokens are the ones that have the higher yield. So especially in stables. So if that's just like it's like a double-edged sword, you're going to get lower yield if you go safer, but you want to chase higher yield, but then there's always going to be the element of risk. So I'm just curious because I see you guys are talking about the governance, but I just don't know why. I just question why you haven't launched the governance first.
Because of the market, Matt. It's because of the market. I mean, if we issue governance token now, I mean, we just waste so much value. This is not the time to issue it.
Got it.
It's
okay,
just
thank you
nobody.
guys.
I mean, we have fantastic product. I really believe in this product. I believe in what we are doing. Our approach is we choose something which is extremely liquid. Second, we care about risk. Only then we care about APY. And so, liquidity and risk is already kind of our number one concerns. As you notice, we're not trying to maximize the APY. That's not how we track the people. So that's our approach over here. We cannot yet issue our governance token. We would like to, but I don't know. When the markets improve, we will. And we are fully doxed. You know where kind of where we live. If you want to verify that my LinkedIn, which is published on our site, is mine, just send me the LinkedIn, mention our conversation, I will accept. So
no, of course,
I mean,
I don't question the legitimacy. I mean, I think everyone over the past few weeks has learned like a big lesson that just because someone is doxxed doesn't mean anything. Like look at Doquan and Justin Sun and like all of these like questionable things that happen. So being doxxed doesn't mean, I mean, it means something, but it doesn't carry it doesn't legitimize what you're doing. Not you, but I'm saying just in general. Mostly because a lot of the times that these things happen, it's just negligence. It's not actual malicious intent. That's why I was mentioning like the strategies. Like you guys might be using a strategy for like by using another collateralized token, but then not have an understanding of like the other layer of what the collateral is behind that token and what their peg is reliant on. So I just want to always make sure that
ask me
there's
those
due
questions
diligence.
about these tokens with a specific example, because I mean, on Polygon there is only one token you could be referring to this way, and that is my. And we're still waiting for them to get listed on Aave to start our due diligence. But every time we looked at investing into unfortunately, we cannot predict the price of is too volatile towards USDC, and we cannot afford to invest into a stable coin which can have more than 4 or 5 basis points divergence from kind of volatility.
Would negatively affect your peg.
And we would have daily losses. We would have negative rebases if we invested into just because you look at it at some point times 0.9999 something, and then another day it's 0.9875. And one day we move like this is actually, it looks like it's small, but once you translate it into APY, that's actually huge.
Because even my is over collateralized, but it's just that the collateral that they have is a little bit more it fluctuates a lot more, so that's why.
And the incentive to maintain the peg there is for people kind of to reimburse their debts.
I mean that's a completely different. That's the only different thing. Like what you're trying to do, there isn't really a chance for liquidations. So there's an arbitrage opportunity to make profit off liquidation. So it makes sense. But if you just only have stables as collateral, you can't. That's why I think last time I asked about liquidations, because if you're basically taking a loan, kind of like you're minting tokens, and then maybe the peg were to go under, is there an arbitrage, or something to?
But the arbitrage we run ourselves. But we see that USD plus towards USDC or USD plus towards Vmatic is different. So the peg kind of starts diverging. That then our bots will mint or redeem USD plus with USDC. And we will actually, at the moment, we are not earning money on that arbitrage. We kind of try to maximize the volume and show how good the peg is. At some point, we'll start making money on that arbitrage. But I mean, it's very obvious arbitrage, and we know how to do it, and that's how we maintain the peg. I can argue that because we are capable of doing this, our peg is much stronger than that of Mai. With all respect to my colleagues at Chidao, who I think are doing fantastic job as a lending protocol, our peg is much stronger. And we cannot invest into Mai before they address the issue with their peg.
Your collateral is also much more stable than like a lot of the BTC and ETH vaults and stuff. So it's
well, but I think Mai should be spending money on maintaining the peg much closer to par, which they could, but they're not just doing it. It's very simple to trade Mai against USDC. It just costs a little bit of money, and it's very easy to improve that peg. It just needs to be done. It will cost a little bit of money, but I think with the, that's what some of the revenue of the protocol should be spent upon. And then, they'll be able to list on Aave. The peg will be stronger, and people would feel more comfortable investing into Mai, and then that would kind of reduce their borrowing costs, which they have to undertake at the moment. But I mean, from my point of view, that's a fantastic lending protocol. The stable coin is great. It's not an algorithmic, it's a CDP, and that's the best CDP there is on Polygon so far. But for us,
speaking of like the risk, though, when you determine what the collateral is, the ratio, like, the percentage of what you're collateralizing your peg, right? Do you take in risk into consideration? Like, what are the factors that you're using when you're determining what the percentage of collateral will be from a different token?
I look at the volatility of the daily returns. And so we make sure that there is 3 standard deviations away from zero. So meaning that volatility of returns is such that probability of a daily loss is below 3 in 1,000. So we need to make sure that 3 days, that 997 days out of 1,000 days, there will be profit. That's what we calculate.
Okay, got it. Thanks, Max. I appreciate it. I'm going to go back to listening.
Thanks. Thank you. Sorry, guys. Yeah, Matt asked maybe a little bit off the topic, but asked very spot-on questions, which I not allowed to let unanswered about the quality of our portfolio and the risks we're undertaking and due diligence. I think these are things which we must have an answer right away, just so that in times like this you have full confidence of what we're doing, exactly what we're doing, and that your money is safe. So sorry, a little bit diverging from the main topic.
Yeah, it's all good, Max. And thanks, Matt, for great questions. So we move on to the next news from last week. We moved to Penrose. So after evaluating the Penrose protocol, we decided to migrate our liquidity pairs to the liquidity pairs on Penrose. Remember, we have USDC, USDT, and USDC DAI staked on Penrose on Dystopia. So we moved them to Penrose as well. Just for the reference, the APR for USDC USDT pool on Dystopia is 6 to 15%. It's depending on how many people, how many votes this pool has, and the APR on Penrose for the same pool, one staked there, is 13% sharp. So it's pretty much kind of a no-brainer that this will give us higher rates, Max. So now, like when a protocol needs to withdraw or deposit the funds or extra funds, it has to go through additional layer of kind of like logics inside the protocol. Like, is it prone to any errors? So what I'm saying is that now after USD plus is minted, we have to buy USDT, then we have to create a liquidity pair on Dystopia, then we have to stake this liquidity pair on Penrose. Like, does it provide any risks like associated with those multiple staking and the multiple actions?
Yeah, I mean, so yeah, you probably remember that we took some time to switch to Penrose. Typically, if we don't, USD Plus is not allowed to stake anything for a prolonged period of time. We can only be invested into liquid assets. That's why we could not, as protocol, not as treasury, but as USD Plus, always must remain liquid. And that's why for USD Plus, it always makes more sense to farm via Penrose than to farm on Dystopia, because on Dystopia, if you don't vote for the pools you are farming from, it's actually very unprofitable. You get minimum interest rate, like minimum APR, and sometimes even below that, and depending how people vote for that. And it just becomes very prohibitively uninteresting. Um, and so we actually, but we took some time to switch to Penrose. It was obvious to do it. And actually, from our contract perspective, there was no extra complication. Just take LP from Dystopia and lock it to Penrose, and that's it. No real complication at all. But we took time because our chief developer, Nikolai, had to go through the entire code base of Dystopia to make sure that our funds were safe. And he went through the entire thing. Actually, he identified two small errors in the code, which sorry, of Penrose, of Penrose. I apologize. Yes, he previously went through Dystopia when Dystopia was launching, but Dystopia was easy because it had Uniswap v2 inside, and once we saw it was the same in terms of pool contracts, it was very quickly for us a yes to go with Dystopia. But with Penrose, it was more complicated because it's less proven and known code inside it. And so Nikolai had to go to the entire code base. He identified two small errors in the code, which would still kind of keep our funds safe. But at some point in time, we thought, we wanted those two errors completed before, kind of corrected before we moved our funds in. You might know that I sit on the multi-sig. I'm keeping one of the signatures for the multi-sig for Penrose. So we initiated, kind of communicated the bugs which were found to the Penrose team. Those were corrected. I signed off on the new code for Penrose, and once that was done, we moved our funds. Moving funds, creating new contracts on our side was no complication. Complication was doing due diligence and making sure that because Penrose was new, and when something is new, there are always bugs. People have even the best intentions. There are always bugs, and we needed to make sure that our funds were safe, and that's why we kind of moved 1 week later than we could have otherwise.
Okay, that makes sense. If anyone has questions about that, let me know here and raise your hands or in our chat. Looking in our chat. Are Penrose and Dystopia audited, or did you audited them yourselves?
Yeah, as I said, I think Dystopia is audited. I'm not sure about Penrose, but the thing with audits is the following: like auditors never find anything. So it's funny, but like everything which has been hacked had an auditor behind it. Like there is even this list of of which auditor, like which protocols got hacked and which auditor was behind it. And so every auditor has been hacked. So we never rely just on the audit. Even if people have 2 audits, 3 audits, 5 audits, we just don't rely on it. It would be gross negligence to rely just on the audit and not do our own code review. That's why we reviewed Dystopia. Dystopia was simple, as I said. It had Uni v2 contracts for the LP. So that is highly proven, and that is obviously very safe. So we were fine, and right away, and we reviewed Penrose ourselves, and we are comfortable at the moment with Penrose.
Nice. All right. If no more questions about that, I don't see any raised hands or questions about it. We can move on. Max, we remember last week and probably the week before that, we had those movements, pretty significant movements of $500,000 redeemed and withdrawn from USD Plus. And it cost like, and it sparked a lot of conversations internally, and so that we could just understand like what we should do with this higher numbers moving forward. So why 500 or 20% of the whole portfolio back in the, even it was 25% of the portfolio, is significant from the protocol? What risks can it bring us, and how can we mitigate that?
Yeah, our protocol kind of, when you invest so much, our protocol would kind of deploy that cash into specific strategies. In particular, it would swap USDC for USDT and USDC for DAI to invest into those strategies. So when an amount is so large, there is slippage. And in the past, what we did is we would swap everything on Balancer. Balancer had a full pool, TUSD, so true USD, USDC, DAI, and USDT. And that was the pool where you could swap for 1 basis point, and it had $100 million in it. So it was by far the largest pool on the whole of Polygon, by far the cheapest way to swap, and by far the smallest slippage possible. What has been happening since May on Balancer is that they found some sort of vulnerability in their contract. And that is why TrueUSD, which was the provider of that money on Polygon, moved that pool from, so they withdrew like, so now it's like 2.5 million or something like this. So it went down from 100 million, and where we could kind of swap millions with no slippage and 1 basis point of cost, it went down to 2.5 million, and suddenly a swap of 500,000 there started incurring pretty significant slippage. And meaning slippage means essentially the conversion has become more expensive. So what we are working on right now is, well, first of all, we have put in precautions. So now if somebody invests into USD Plus, everything goes into Aave, first of all. And that's why Aave last week had such a big proportion in our portfolio, because we were afraid. Well, first of all, we made sure that when somebody invests, it first goes to Aave, and we kind of control how that gets converted into USDT DAI. And we could kind of, convert in small steps to avoid large slippage, and the other way around. So that was like the protection number one. Protection number two is that we kind of are now working on kind of building a mini version of 1 inch inside USD plans, so that on the protocol level, we can see where it makes more sense to swap USDC for USDT and USDC for DAI. And not for all tokens, but just like these tokens, and see, where best and how best to convert it on Polygon to minimize slippage. So once that is in place, actually, we will be completely kind of proof, and we will, really minimize those slippage costs. But that takes a lot of work to really do that for large amounts. So that's what we are very much focused on right now, and it's actually very important for us to realize that logic inside USD Plus. But that is the most critical thing, which the events of the last 2 weeks have shown, that these large moves can inflict slippage, and because of this, essentially, the whole of the entire week we would be making like 10% APY, I think, if it were not for these large moves. And because of that, because of the slippage, we were making like 4% or 4.5%, 5%. That was essentially because of the slippage on those large trades, unfortunately.
Okay. And when we get to larger TVLs, will it be solved, do you think?
It's certainly going to be solved within, a week or two. So it's already solved in largest part because we know how to break a large inflow of money into small pieces and minimize the slippage. So that's already done at the protocol level. But now we want to make sure that we optimize the conversions regardless of the amount. So we believe that will be solved very, very shortly, within like a week or two. And so before we get to the kind of 1 billion TVL for sure.
Got it. Nice. Do you guys have any questions about that? Please let me know in a comment or raise your hand, and I'll make sure to put you on the stage. And if no, let's move on. The next update is the tax wrapper development for North American users. So
It's not tax wrapper; it's just a wrapper,
wrapper.
and
Yeah, for
we're not advising on taxes. Come on.
yeah, it's for different purposes. Let's call it this. So our
Some people ask us for a wrapper. It can be very useful. Yes.
yeah, Max, can you talk about that? What is that? How does it work? And what's the like technical like the tech behind that? What's this wrapper about?
Yeah, the wrapper is very simple. So actually, every week I'm being asked, like every time we talk to somebody, so I'm being asked about when do we put a wrapper around USD Plus, on average once a day. So somebody in the community will mention this. We'll do an AMA session. We went to 1inch. People asked me, first question which was asked was about when do you guys have a wrapper? We're pitching USD Plus to some other guys, like to a community which we want to switch to their pool liquidity to USD Plus. They'll be like, yeah, sure. When do you have the wrapper? Can you accelerate it? I spoke to some of the investors, like VC investors for USD Plus, and they're like, very interested. When are you going to have a wrapper? And so it just became very clear that we should do it. And so we actually had, I would say 80% of it already done, because when we worked on the boosted pools for Balancer, they asked us to build a 4626 compatible wrapper around USD Plus. So since then we know how to even improve it, but I mean it's 80% done. So I hope it's going to be finished this week and launched this week.
Nice. Let's explain a little bit more to people what is it, what does it do, and let me take a step first, Max, and you correct me how you correct me if needed. So essentially, what USD Plus is doing is USD Plus is growing every day, and technically, it means that you're earning profit every day for like let's say different purposes. And if you don't want to show this profit and this profit to be recorded on a daily basis, we're going to introduce a wrapped USD Plus, which will allow you to control when you're going to show the profit from USD Plus. Essentially, you buy USD Plus, you mint it, then you wrap it, and when you need to show the profit, you unwrap it, and only in this moment in time you will see the balance grow. But internally, we will of course show you internally how the balance changes on our DApp. But for the reporting purposes, you will have your like you will have control over this moment when do you want to unwrap it and show the profits. Max, anything to add here?
No, I think you're good.
Okay, cool. Any questions regarding that, guys? No, not in chat. No raising hands. All right, moving on. The next thing is like couple updates from not couple. It's just an update from our marketing. Just I'm pretty sure you've seen this tweet that we grew 5 times since UST crashed. So it's a tremendous growth for us while the whole market is going down. Unfortunately, fortunately for us, we've been growing 5 times, and we've made a tweet about that, and it has been like the most the best organic tweet we ever had. So people really kind of appreciate it, and they really support us and appreciate it. So kudos to the team and kudos to you guys who will also help us promote our growth of TVL. Mm, from the
to be fully honest, it's now 4 times, not 5 times.
Yeah.
We got to be, I guess, straightforward about this. I'm very glad that 500,000, which was invested into USD Plus, it has helped us kind of understand the risks and issues which might arise from large kind of mercenary liquidity coming and leaving USD Plus. So I'm grateful those guys were in. Now that 500,000 has left, we have grown 4 times, not 5 times. So there is less TVL. But I also feel a little bit of relief that I don't need to kind of wake up at night and be afraid whether this 500,000 has been withdrawn with minimum cost.
Yeah.
So yeah.
Yeah, it's good exercise. So and luckily we got our lessons. Couple of announcements, guys. So we are preparing a new weekly show. Let's call it that way. The name is still TBD. We're thinking about something like DeFi Wednesdays or DeFi basics or DeFi future. If you have any ideas, throw them in chat. So essentially, this is going to be Twitter Spaces with Max and with the opinion leaders in DeFi, where we would break down the news and we would discuss like what's going on currently. We would try to educate people um, and just kind of help the audience with their questions in DeFi. Because the thing is that we know that the industry needs transparency and the industry needs some kind of people stepping up and explaining what's going on right now and how to react on that. So the first is
it would also be cool if people come to those Wednesdays with some ideas or strategies which they see, and we can kind of discuss what are the risks and returns which we see in those strategies, and whether they fit or don't fit our low risk appetite.
Yeah, absolutely. So tentatively, the first one is going to happen this Wednesday. It's still pending confirmation from our partner, which is yet to be announced. But yeah, starting from there, we're going to make it weekly. So guys, feel free and make sure to join it and support us and also participate because we know that this community is extremely knowledgeable and we really value the knowledge of this community. So feel free to join us on Twitter Spaces. We'll make sure to add you to speakers there. Another announcement is we're going to have AMA with the Dead Wallet Society on Thursday and with Parrotleaf Finance on Saturday. So make sure to tune in. This is something that will add to events. And yeah, I guess that's it for the day from the official agenda. Anyone wants to get on the stage and just share their news, thoughts, and ask questions while Max is here? I'll give 10 seconds awkward silence so that you guys think of a good question.
I think that's it, Andrew.
Yeah, I think that's it. Cool. All right. Well, Max, thanks a lot for this great AMA today. As always, thanks everyone for tuning in. You know that we are constantly in chat. Max is constantly in chat answering your questions. So feel free to jump in and ask questions there. So yeah, thank you and have a great week.
Yeah, I also wanted to thank you guys in particular, like everyone for joining, in particular, Plus community. So Pingu, One Plus, thank you very much for joining. Dark, Shinra, CryptoFit. Guys, thanks for attending this AMA. Really appreciate it. Thanks and bye bye.